Bitcoin is on track to hit its price target of $1.5 million per Bitcoin by 2030. Yes, this might sound insane, but this price target is based on real data. In this video today, I want to discuss ARK Invest's most recent price target. And it isn't just based on wild guessing, no. It's based on real trends that are actually unfolding right now. Bitcoin's growth is fueled by 6 key drivers, and the last one might change everything for you. So let's dive in. ARK Invest's most recent $1.5 million price target. So ARK Invest recently announced this, or recently published a report showing their 2030 Bitcoin price targets. So in this report, they give 3 different scenarios. They give a bear case, a base case, and a bull case. So let's have a quick look. The bear case is that ARK Invest expects that Bitcoin could hit around $300,000 per Bitcoin by 2030. So that's the worst case scenario based on their research. That would mean that from now onwards, Bitcoin would grow with roughly 21% per year, which is still significantly higher than most traditional assets like stocks, bonds, real estate. And then we have the base case. So in the base case, ARK Invest predicts that Bitcoin would probably hit around $710,000 per Bitcoin. And that would mean that Bitcoin would grow with roughly 40%. So this CAGR means compound annual growth rate. So, and then we have the bull case, which we are talking about in this video. In the bull case, the best case scenario, they believe that Bitcoin could grow to $1.5 million per Bitcoin. And that would mean that Bitcoin grows with around 58% per year, which is quite significant. Now, they also break down how they believe that Bitcoin could grow to this price target. For example, here are 6 key drivers which they are analyzing to understand the future growth potential of Bitcoin. So these 6 key drivers are institutional investment, emerging market safe haven, corporate treasury, digital gold, nation-state treasury, and Bitcoin on-chain financial services. So in this video, we're going to break down each of these components and share what effect they might have on Bitcoin. And if you enjoy watching videos like this one, do me one quick favor, smash the like button and subscribe to my channel, because I'm going to be posting regular videos just like this one to make sure that you maximize your profits as an investor in the market. Now, let's start with the first driver of Bitcoin, which is institutional investment. And ever since the Bitcoin spot ETFs got approved early last year, we saw a massive explosion in the price of Bitcoin. And we've seen some of the biggest players in the industry getting on board of the Bitcoin train. For example, BlackRock. All right, BlackRock has already bought hundreds of thousands of Bitcoin already in a time span of just a little bit more than 1 year. We see other large asset managers out there, like Fidelity, which are also scooping up Bitcoin left and right. And not to mention MicroStrategy, which recently rebranded to Strategy to emphasize to the world that their strategy is to accumulate as much Bitcoin as humanly possible. And then Grayscale, another large asset manager, which is also scooping up loads of Bitcoin. And Goldman Sachs, even banks and investment banks, are now buying up Bitcoin, whilst they have been the biggest critics of Bitcoin. You know, banks have been attacking Bitcoin for the past 15 years because they saw it as something that could undermine their authority, their credibility, their influence, and their dominance in the financial system. So they did everything they could in order to prevent Bitcoin from becoming a thing. But right now, in 2025, Bitcoin has become an unstoppable force. And even these banks are now realizing that instead of trying to fight Bitcoin, they should just embrace it. If you can beat them, join them. So now these banks are actually selling Bitcoin products and services to their customer base because they understand there's a lot of money to be made by just riding the wave instead of trying to swim against the current, you know? So if we look at the number of Bitcoin in treasuries, basically This is a diagram or a pie chart showing how the distribution of Bitcoin is according to different groups of holders. So we have the ETFs and other funds. We've got DeFi and smart contracts, public companies, private companies, governments. And if we zoom in on the section of ETFs and other funds, then you see that they already own around 1.2 or 1.3 million Bitcoin. That might not sound like a lot for some of the biggest players in the world that are managing trillions, but there will only be a maximum supply of 21 million Bitcoin that will ever be in circulation. And if you understand that all of these institutions have scooped up most of these Bitcoin in the past year, then you understand that if they keep on buying more Bitcoin in the next few years, there will simply not be enough Bitcoin for everyone to go around. And that's why I believe at one point, Bitcoin will become an asset class which only the elites can afford. Right now, I believe Bitcoin is still dirt cheap, okay? If you compare it to where Bitcoin can go in the future, then now it's dirt cheap. If you compare it to where Bitcoin was in the past, then yeah, maybe it's expensive, but that's most of the times not the best way to evaluate the value of an asset. For example, yeah, you can say that Apple stock one day was below $100, but does it make Apple stock right now expensive? No, you look at the future growth potential of a stock compared to where it is right now. Similarly, these large institutions understand that Bitcoin right now is super cheap, and they're doing everything they can to accumulate as much as possible before its price goes through the roof. Then, if we look at this tree map chart, so here you see different sectors of Bitcoin holders or different types of Bitcoin holders, public companies, government entities, private companies, ETFs and funds. If we zoom out, then you see that the largest part of these public Bitcoin treasuries are held by these asset managers and funds, which are managing all of these ETFs and other publicly traded Bitcoin products. So they are a very important driver of Bitcoin's growth. In fact, ever since the Bitcoin spot ETFs were approved, Bitcoin increased from, roughly $40,000-$50,000 per Bitcoin to almost $100,000 per Bitcoin, just because billions of new dollars flooded into the market, driving the price of Bitcoin up even further. Here, Bitcoin Magazine is saying 60% of the largest hedge funds have disclosed Bitcoin ETF holdings. So here you see Citadel Investment Group, they own Bitcoin. Bridgewater Associates, not yet. Millennium Management, and you can go down the list, and these are all of the top funds, and most of them, so 60% of them, are already holding some kind of Bitcoin exposure, either directly into Bitcoin or through Bitcoin spot ETFs. Here's another tweet saying, if you feel uncertain, look at what the big players are doing. Exactly, aka follow the smart money. The number of holders with 1,000 or more Bitcoin has increased by 37 since the beginning of March. Meanwhile, the number of holders with 10,000 Bitcoin or more has risen by 2. So let's have a look at these charts. So here you see the number of addresses with more than $10,000. And here you see, with more than 10,000 Bitcoin. And here you see the number of addresses with more than 1,000 Bitcoin. So compared to earlier in the year, compared to the bear market, we saw that a lot of whales actually started to accumulate in 2022, 2023. And recently they have started to take a little bit of profits because there are not that many wallets out there which have more than 10,000 Bitcoin. So here you see it's fluctuating. Earlier in 2022, we were below 90 wallets, almost at 80 wallets that had around $10,000 per Bitcoin. And now we see that we are above that number. So if we look over the long term, so 2-3 year period, then we are above where we were in 2022. So meaning that over time, we see more whales which are in the market. And now you see that, this is starting to trend upwards again. And if we look at the number of wallets with 1,000 Bitcoin or more, then you see that in 2022, we saw a big sell-off. And then somewhere around 2023 and towards the beginning of 2024, this number started to increase again. Well, what happened in 2024? We saw the approval of the Bitcoin spot ETFs, which again caused a massive surge in the number of wallets holding more than 1,000 Bitcoin. Right now, BlackRock owns around 567,000 Bitcoin, roughly $47 billion worth of Bitcoin. Michael Saylor's strategy now owns almost 500,000 Bitcoin. I believe they already own 500,000 Bitcoin, worth over $41 billion. We see that the UAE Sovereign Wealth Fund has invested $2.5 billion in Bitcoin and crypto since November. And BlackRock is saying that Bitcoin's institutional adoption is not reflected yet in the price. The pace of institutional and wealth advisory adoption has accelerated. So you're seeing that all these big dogs are coming into the market, and they're not investing with a few $100s of, savings that they saved up. No, when they're going into this market, they're coming in with billions, okay? And what this last tweet of Bitcoin Archive is saying is actually something very significant. So right now, it is not priced in how much money these large institutions are going to pump in the market, either directly by acquiring this asset or by pitching it to their clients, of which they're managing their assets, high net worth individuals which might want to get some exposure to Bitcoin. I believe also recently Larry Fink and BlackRock came out mentioning that every investor should have 2% exposure to Bitcoin. Imagine that every single client of BlackRock or those other similar types of companies are going to get 1 or 2% exposure to Bitcoin. That already means that we're going to see hundreds of billions flow into Bitcoin. Now, let's talk about the second factor, which is emerging markets are turning to Bitcoin as a safe haven. Now, when we're talking about emerging markets, we're talking about all of these developing countries. For example, in Latin America, in Africa, in Southeast Asia. So here's a tweet by Swan, and he's saying that the Central Bank of Argentina embraces Bitcoin. Their newest art installation showcases live Bitcoin miners and artwork symbolizing the decline of paper money. Well, that's a very strong statement to make by a central bank of Argentina. Now, let's have a look at this. Bitcoin is not an investment for most people. Keep that in mind. So in first world countries, we always just talk about, making money with our money, putting our money to work and thinking about our retirement. But most people are not thinking about their retirement. They're thinking about surviving because they live in countries with very harsh living conditions. Maybe they have authoritarian regimes that are suppressing them, or maybe there's hyperinflation like in Venezuela or something, or Zimbabwe, and people just want to survive. And Bitcoin is one of those solutions for people to gain back the financial control over their lives. So think about Turkey, Thailand, and Argentina. Their crypto adoption rate is twice as high as the USA. And that has to do with, for example, the fact that Argentina had an inflation rate of more than 250% this year. So for them, crypto adoption is not optional. It's a necessity. Imagine, that your money that you're saving up is, being cut 60% or 70% of the purchasing value is being wiped out every single year. That's absolutely insane. So for those people living in those countries, it's a necessity. It's not about retiring, it's about surviving. Here, another tweet. Turkey, Thailand, and Argentina had the highest crypto ownership rate in 2023, almost twice as high as the United States or European countries. Here's a tweet by Plan B. He's saying, it's simple. With fiat, you need to trust. You need to trust that central bankers and governments not print money for their welfare and warfare. So we need to trust governments and central banks to not abuse the fiat currency system that they're governing. But with Bitcoin, you don't have to trust anyone, really, because you can verify everything yourself, because everything is open and transparent on the Bitcoin blockchain. So Bitcoin is much better money than the fiat currency system. And he's saying that Bitcoin will replace fiat just like cars replaced horses. It's a matter of time. Well, if I believe that Bitcoin is going to replace money, I'm not sure about that. I do believe there's a role for fiat money and for Bitcoin, and that they're not mutually exclusive. But for people that want to store their wealth and protect themselves against, erosion of their purchasing power, I believe safe haven assets like Bitcoin are not optional. They are a necessity, just like what one of these tweets mentioned before. Now even countries are embracing Bitcoin because countries and governments are struggling too. It's not only the individuals living in those countries, but also the governments are trying to, keep their economies afloat by putting some of their wealth into assets that can protect themselves against inflation or uncertainty or chaos. So that's why many countries around the world have gold reserves, but nowadays they also have Bitcoin reserves. And the biggest holder of Bitcoin right now, I'm not sure if this chart is accurate. I believe the United States still holds around 200,000 Bitcoin. And I believe China is second with around 190,000 Bitcoin. Most of it was seized in criminal cases. And then we have the United States, which is holding around 61,000 Bitcoin. And you have a bunch of other big holders. And then we have countries like El Salvador and Bhutan, which are mining Bitcoin, and El Salvador is DCAing Bitcoin. And we're starting to see a much bigger trend around the world that countries are now also getting exposure to Bitcoin and taking it a lot more serious. Then, of course, we also have corporate treasuries, which, we mean publicly traded companies or privately traded companies, so meaning that they're not listed on a stock exchange, that are buying up Bitcoin to hold it on their balance sheet in order to protect themselves against inflation. So here's a tweet by 𝗗𝗶𝘀𝗰𝗹, and he's saying, if a company is not adding Bitcoin to its balance sheet, it's likely going to the ground as a stablecoin. And that is a future scenario for any company that does not acquire Bitcoin. As an example, over 6 months, the blockchain group, as Europe's first Bitcoin treasury company, is up with more than 300%, while the CAC 40, so the 40 biggest companies in France, is up with only 7%. So again, he's saying it is not optional for you as a company to invest in Bitcoin. In fact, if you want to stand out and survive and thrive as a company, you need to invest in Bitcoin. And he's concluding with, that is the power of focusing on Bitcoin accumulation. The interesting part is that Bitcoin is up with 30% over the same period. So this means that if Bitcoin is up with 30%, but the company buying Bitcoin is up with 300%, it means that the market is just overly optimistic about the future of those companies, right? It means that they're doing something great and the market is validating their moves. Here is another tweet by Swan, and he's saying Wall Street issued $81 billion in convertible bonds this year. MicroStrategy took $62 billion of that to buy Bitcoin. That's 7.6% of the entire convertible debt market is going straight to Bitcoin. Just one company. And Bitcoin is eating TradFi, which stands for the traditional financial system, and it's still hungry. This is just the start, guys, because MicroStrategy is creating a playbook which other companies are also slowly adopting and copying. Here's another tweet by Bitcoin for Corporations. He's saying treasury strategy is broken. Holding cash bleeds value. Buybacks are just short-term boost. Mergers and acquisitions are high risk, but Bitcoin is the strongest option for preserving purchasing power and reinforcing balance sheets. This is the decision matrix that every CFO needs to see. So here you see all of these different treasury strategies: holding cash, buying back stocks, dividends, debt repayments, mergers and acquisitions, and Bitcoin allocation. And you're seeing that most of these strategies have at least one red flag, let's say. Or if not, then they have multiple yellow flags. But Bitcoin only has green flags or green boxes and one yellow one, which is the volatility. But if you understand Bitcoin's volatility, so if you understand the price movements in Bitcoin, meaning it doesn't really matter if Bitcoin's price goes up or down in a single day. Yeah, it can go up and down quite significantly in a single day, and even bigger in a few weeks or a few months. But if you zoom out, Bitcoin tends to move in 4-year cycles. And if you zoom out and you're willing to hold on to Bitcoin over the long term, then who cares about its short-term price fluctuations? Because generally every 4 years, the price of Bitcoin ends up way higher than it was in the previous 4 years. So you just need to be patient. Here is an update by Thomas Ferrer. And he's saying investment advisors are reallocating away from traditional growth assets to Bitcoin ETFs. On average, 3.5% according to Carson Group VP. 2 months in is very early. Only the most nimble advisors have been able to move this quickly. Interesting. Swan is saying, choose your money wisely. Bitcoin is up with 867% in purchasing power since 2020, whereas the US dollar lost 19% of its purchasing power since 2020. So here you see, yes, Bitcoin is very volatile over the short term. Its price can go up and down quite a lot. But over the long term, if you zoom out, so when in doubt, zoom out, the price of Bitcoin tends to go up very rapidly. In 2010 to 2020, it was actually named the best performing asset class of a decade because it generated 230% of annualized returns. Now you see that even with a very deep bear market in the previous cycle, we're still up 867% since 2020. But if you were holding cash, guaranteed the purchasing power of your money was being wiped out. And this is not only the case for US dollars, also for euros, yen, Great British Pound. All of the major currencies have lost purchasing power. Okay, let's talk about another driver of Bitcoin's growth, which is the narrative that Bitcoin is seen as digital gold. So for many centuries, gold was seen as a go-to safe haven in times of chaos. So many societies were obsessed with hoarding gold. The Spanish Empire, the Roman Empire, the Dutch, you name it. It goes back many centuries. All of the prosperous nations and all of the wealthy individuals in history have been hoarding gold. And now we're seeing a new asset class pop up, which is gold, which in many cases or many perspectives is much better than gold. Why? Because gold is, first of all, if you want to hold large amounts of gold, it's a security risk, right? And you need to have special safes and you need to have security. And you might not want to have that at home because if people know it, then they might try to rob you. So generally people put their gold with a custodian, but those custodians, which are basically large vaults which are highly secured, those charge very high fees for you to store your gold. So Bitcoin, on the other hand, is very easy to store. You can put it on a cold storage wallet. You can hide it somewhere in your house. You can put a copy of your seed phrases somewhere in another safe location. You can even take your wallet or memorize your private keys by heart. And I don't know, you can fly across the world and nobody is knowing that you're bringing very large amounts of money. And there's many other reasons why Bitcoin is a much better alternative than gold, because the gold supply isn't fixed. At any increased cost, you can probably mine a bit more gold. So if you're willing to mine deeper, And generally mining deeper or going deeper into the ground increases the cost of mining because it becomes more complex. But if you're willing to spend more money, then probably you're able to extract more gold from the earth. But it is not possible to create more than 21 million Bitcoin. There's a hard supply. Gold is very heavy and hard to transport. Imagine that, all hell breaks loose, World War III erupts, and you want to go to the grocery store, or you want to buy something with your bars of gold, and you need to walk with a wheelbarrow over the street. That is a security risk, man. That's super dangerous. So it's very impractical. Whereas Bitcoin, I can take a wallet with me, or I can instantly transfer some Bitcoin to your wallet, and it doesn't really put me in a great danger. Then, security, we talked about this. So gold requires vaults and physical protection, whereas Bitcoin is decentralized and it has an unhackable ledger. So again, much better. Gold is very hard to divide. You need to melt it at a very high temperature, and it requires a lot of expertise, whereas Bitcoin can be broken into 1 million pieces. Those are called satoshis, sats, and you can send a millionth of a Bitcoin to someone. All right, so you can break it down very easily into very small fractions, which you can then send to other people. Gold has performed really well. It has grown with, what is it? I don't know the time frame, but according to this comparison, gold grew with 50% over a certain time frame, whereas Bitcoin grew with 15,000%. So in many aspects, the scarcity, the portability, the security, the divisibility, and the performance, Bitcoin outperformed gold. And that's why a lot of investors and institutions and banks and even countries are now becoming super bullish about Bitcoin and are pumping billions in the market as a race to acquire as much as possible before the rest catches on. So here you see a tweet. And this tweet is giving a comparison between what happens if you need to transfer large amounts of gold. Well, then you need police escorts, you need all of these armored vans, you need security guards that are probably in these trucks as well. And that's very expensive. It's a logistical nightmare, and it's just a security risk. Whereas Bitcoin, with a few clicks of a button, you can send it all around the world almost instantaneously with very low cost. And that's why we've seen the price of Bitcoin increase in value so much. So many people are now catching on to what Bitcoin really is and what value it can provide to you if you want to use it as a store of value, like people have used gold for in the past. And there's a very large amount of tweets out there, or examples or memes or infographics out there on the internet, which are showing that life is only becoming easier if you're saving in Bitcoin compared to saving in money. But this infographic is showing the difference of hoarding gold versus holding Bitcoin. This car, it's a Corvette. In 2016, you would require 16 ounces of gold in order to buy this car, and you would need 46 Bitcoin to buy this car. Now in 2020, you would need 11 ounces of gold in order to buy this car, and you would need 2.7 Bitcoin to buy this car. And then finally in 2024, you would need 7.5 ounces of gold in order to buy this car, and only 0.2 Bitcoin in order to buy this car, which is absolutely crazy. So yes, if you hold your money, or if you hold your purchasing power or your wealth in either gold or Bitcoin, then over time, life becomes easier because you need less and less and less of that particular asset in order to buy this car. But if you compare these two, then Bitcoin has the sharpest decrease in how much Bitcoin you require to buy this car. Only 0.2 Bitcoin to buy this car, which is absolutely crazy. Okay, here's a tweet by Bitcoin Monger, and he's saying on Friday, Bitcoin ETFs saw inflows of around $277 million, while gold ETFs saw outflows of $172 million. One continues to accumulate at all-time highs, while the other distributes at all-time highs. The flippening in real life, TikTok. So many people within the crypto space are talking about a prediction that at one point Bitcoin is actually going to flip gold as a primary safe haven asset or store of value asset. And we're seeing that, gold recently hit a new all-time high of $3,000, and people are selling their gold ETFs, meaning they're taking profits at the top. Whereas with Bitcoin, we're seeing that people are accumulating more, even though we're close to the all-time high, because they understand that Bitcoin can go way higher than we currently are. So that's what you're seeing. The iShares Bitcoin Trust, it has a very large inflow. Or here you're seeing the sum of all of the inflows and outflows of Bitcoin ETFs. And in total, 277 million flowed into Bitcoin ETFs, which is crazy. Whereas 172 million flowed out of gold ETFs, which we see over here. Now, the final driving factor of Bitcoin's growth is the fact that nation states are now also entering the game. So last year, we actually, this year, we actually saw that the United States announced their Bitcoin and crypto strategic reserve. They were already holding a lot of Bitcoin. They held around 200,000 Bitcoin, which is seized mainly by criminal lawsuits, court cases, those kind of things. And now they announced that they're not going to sell any of their Bitcoin, and they're actually working on new laws and regulations that would allow the US government to buy up to 1 million Bitcoin, meaning 200,000 Bitcoin in the next few years consecutively. So every year, 200,000 Bitcoin, 200,000 Bitcoin, 200,000 Bitcoin, up to the point that the US government owns around 1 million Bitcoin. Well, that would be absolutely insane. 1 million Bitcoin, given the fact that the maximum supply of Bitcoin is 21 million Bitcoin, that gives them a significant chunk of Bitcoin. And again, these countries can simply print fiat money in order to buy up these assets, right? They have unlimited billions which they can use to invest. That wasn't the last driving factor of Bitcoin. This is a final driving factor of Bitcoin, which is the emergence of Bitcoin on-chain financial services. Now, usually, many of the current financial services are happening through the traditional financial system. Think about banks, notaries, lawyers, insurance companies. But with the emergence of the blockchain ecosystem, we're seeing a whole new ecosystem emerge on blockchain, so on-chain, and also on the Bitcoin blockchain. So I made a video a few weeks ago or a few months ago already about the fact that Michael Saylor and Strategy announced their end game, and their end game is to build the world's first Bitcoin bank. They've been accumulating almost 500,000 Bitcoin. I believe they're already over 500,000 Bitcoin. And their goal is to create this bank and an ecosystem of Bitcoin related products and services that people can make use of. So that is going to be absolutely game changing for Bitcoin as an ecosystem, as an asset, but also as all of the activity happening on the Bitcoin blockchain. Michael Saylor is saying that banks will start lending against your Bitcoin. In fact, we already saw that new laws and regulations were passed that will allow banks to custody your Bitcoin and to use it as collateral. So here is another tweet, and he's saying Bitcoin is changing the way that lenders think about underwriting real estate risk. So oftentimes when you want to get a mortgage, then you need to put down some kind of collateral. And generally the collateral that you're putting down is other properties or the property that you're buying. Generally you can borrow like up to, 70% of the value of the real estate object. But what if instead of using real estate as collateral to get your mortgage, you can deposit Bitcoin and use it as a collateral to borrow money against? So this would mean that investors would not have to sell their Bitcoin anymore, but instead they can hold on to their Bitcoin and they can borrow money against the value of their Bitcoin over time. And he's saying every asset class is converging to Bitcoin, even real estate. Here's a tweet by Swan. He's saying that NY Dick is going to launch HODL loans, efficient, low-cost, Bitcoin-backed fiat loans designed to empower hodlers. So again, all of these financial products which are coming out that allow people to borrow money against the value of their Bitcoin without having to sell it along the way. I compare this to, buying real estate in an triple A location, the best location in London, Manhattan, Moscow, or Hong Kong, or Los Angeles. If you have that property, you probably never want to sell it because you know that it's going to go up in value over time. So what the rich do is they buy really great assets and they borrow against the value of those assets over time. And now we're seeing a whole emergence of an ecosystem which allows that, which we didn't really see before. Bitcoin-backed loans, no banks, no paperwork, pure on-chain finance. So here you're seeing, again, more tweets, more developments, more innovation happening around these Bitcoin-backed loans. Here, another tweet with Arch: you don't have to choose. You can get a crypto-backed loan using your Bitcoin as a collateral, so you can access cash without selling your holdings. And think about it in this way. What determines the future growth potential of an asset? It's supply and demand. So the supply is all of the available Bitcoin that's being traded on the market. But what if less supply will be available in the future because people no longer need to sell their Bitcoin in order to buy their dream house? They can just put it down as collateral at the bank, borrow money against it, and buy their dream property. So that means that over time, supply, the available supply on the market, a lot of it is already locked up by these public companies, these hedge funds, these ETFs. But now also retail investors are going to start to sell their Bitcoin less frequently. At the same time, demand is going up because people want to hedge themselves against inflation. Then yeah, probably the price of Bitcoin is going to go up over the long term. So one more tweet. Coinbase is saying Bitcoin-backed loans are here. Borrow USDC against Bitcoin without having to sell it. Rolling out US users starting now. More collateral assets and regions are going to come soon. And this is powered by Morpho Labs and built on Base. So the future of finance is on-chain. So yeah, this is illustrating this whole emergence of this Bitcoin on-chain ecosystem. So this is how Bitcoin-backed loans will take over the financial system by reducing the risk and volatility for pension plans. So even for people's pensions, Bitcoin might become a really interesting asset. All right, guys. Hey, I hope that you enjoyed watching this video. I hope that you now have a lot more clarity on the 6 drivers which are fueling Bitcoin's growth in the coming few years. And the question that I want to ask you is, do you believe that ARK Invest's price target of $1.5 million per Bitcoin by 2030 is a realistic price target given the developments within each of these 6 drivers? Let me know in the comments below. I'm really curious to hear your thoughts. And if you enjoyed watching this video, also make sure to smash the like button. That will give me feedback that you enjoyed watching this video. And don't forget to subscribe to my channel because I'm going to be posting regular videos like this one to help you to make sense of everything that's going on in the markets and to help you to position yourself for maximum profits. Thanks for watching. Peace out. Take care. And I'll see you in the next one.